I love it. I love some good goal planning.
All right, so this is from the files. This is a little old school, but I used to do this a lot. So you can play along with the equation here. So let me get this on my screen. You see that okay?
Yep.
Yep, we do.
So coming into symmetry, you need to have your goal. What is your goal income wise? You want to make, you guys hear that okay? All good? All right. On a monthly basis, whether you're starting out part-time or full-time, it's good to know what we're shooting for, because by understanding what we're shooting for as far as a goal, that gives us really a good recipe of what type of activity you're going to need to put in to achieve those goals. So whether it's part-time or full-time, what type of income are you looking to make? So for example, you need to include in there, if you're looking full-time, what is your overhead that you need on a monthly basis, paying all your bills and having something left over. Plus, you need to think about this is a business, so we need to invest in our business. One of the ways we invest in the business is with resources or leads. So, for example, what is your monthly income goal? You take that, let's say it's $6,000. Okay? Then we want to divide that by your contract level. A brand new agent here starting out with Symmetry comes in starting out on a 70% contract level. Our average sale here is about $1,000. So insurance carriers are going to start you out on the 70% contract level with our core carriers and with mortgage protection products. Now, some specialized products where it's guaranteed issue or different specific products may pay you on a lower comp level starting out because it's a niche market. But overall, we're starting out on the 70% contract level. So what's 70%? You take that divided by your income goal, gives you $4,200. Divide that by the advance your insurance company pays you, which is 75%. So 75% into 4,200 gives us $3,150. Now, when it comes to net place, this is just sales 101. We know, for example, an average agent here is going to write 10 pieces of business. Typically, 80% of it is going to be placed, meaning that the people qualify for the insurance and they're protected. Sometimes they don't always tell you that they might have some ailments that would prevent them from securing that insurance. So 80% is a good middle of the road estimate that we want to shoot for net place business. So we take 80%, divide that into our 3,150, gives us $15,750. Okay, and what is that? That is our monthly APV goal. So knowing that if you write $15,000 worth of business in the upcoming month, you're on track to make $6,000. So we want to even we'll narrow that down and take the 15,000, divide that by how many weeks are in a month. Let's go with 4 weeks. That gives us $3,937 or APV, or what we call annual premium volume per week. So what's your goal? Is this week you're shooting for, let's say, $4,000 worth of annual premium volume. Our average sale is how much? About $1,000. So you could look at that and say, hey, listen, I need to write 4 applications this week, plus some, right? So this zones us in on what our APV weekly goal is. Now we're going to talk about what type of activity you're going to need to put in to get to that APV per week and achieve your monthly income goal. There you go.
That's the old whiteboard. I love it. So it's and because it was what 60% when you started, correct?
That's right.
Yeah. So it's 70 then, 80 now. I like where it's going. Well, it's going to tie in well to what we're going to start with. We're going to do literally 2 different things today, But I get asked this a lot. I really want I built some stuff so I can show you. But it's there, right? And how it goes. So I want to start with this. Let me go to share my screen. Okay. And we're going to show you two test cases. Okay. So Jeff Sigworth came on and talked about what the IULs can do and how they're right, like how they work, where they go, kind of what's going on. And I loved his little sheet he built, but I want everybody to actually understand what's happening and why I would look at certain products if I was running a business today and what I'm personally looking at. I'm always going to tell you go check your upline, but I want you to understand that when you're using an IUL for face value for protection, you want to be aware that there's a cost of insurance there, okay? And America's cost of insurance is exorbitant compared to everybody else's. All right? And it's not a little bit, it's a lot of it. So I'm going to show you like actual illustrations here, okay? So this is a 59-year-old male, okay? That is we're doing $100,000 face value for. Okay. Now, when you're talking to America, don't ever look at this number because if this number is happening, I promise the other IULs are going to like melt that number away. You always want to start here in the middle. Now, here's what I want you to look at. Okay. First, it's $215 a month for right for a 59-year-old for $100,000. But people are living longer. But I want you to look down here, okay? If they live into their late 80s, and this IUL just does on average what most IULs do, because this is really what the average is, they're not going to have any coverage when he gets into his late 80s. He's literally not going to have insurance. And the last thing you want to have happen is you get a phone call and you have to use your E&O. Okay. Like that's not a great situation to be in. So understand America's cost of insurance is really high. I also want you to think about what it's actually doing. So now if we go over to Quantum and we look at the same guy, okay, not only is it now $5 less a month at Quantum, okay, because they've made a few adjustments. I want you to look at this big fat target premium number right there. 2960. 200, we'll call it, times 12 is only 2400. You're also getting paid on 2900 on Quantum instead of 2400 because of how Quantum pays. Okay? So you're getting an extra almost 20% value towards your face. Okay? So big deal. Now, keep in mind, if you get them in where they're younger, we can take this face up to $1 million. You don't want to, but you can actually use all of the stuff there for it. But let's get down to the number that matters. Okay. So again, guaranteed assumptions means it's guaranteed to be there. If it only stays at 25% for the next 15 years, we're buying bullets instead of insurance. Like we got real problems if the market doesn't make any money over the next 15 years. Like that's real world issues. Okay. So you can see they show it as 4 and 7, right? But even there, if it only does this, right, we have to look at that. The reality is it's most likely going to be in that 7% range because it pays up to 12. But you're going to make way more, they're going to make way more cash. I want you to look at this. So in 20 years, oh, I didn't mute my phone. Oh my gosh. Hold on. Oh, that's a client that I've been trying to get hold of. Ugh. All right, I'll deal with it later. So as you go through, right, you see the 35,000 there, right? Probably more like 24. They're going to have 10, 11, 12,000 more dollars in their quantum policy than they are there. So you've made more commission. You've made it there. and the price on the face is really competitive now compared to what it was before. Now, keep in mind, this only goes up to 60. Now, does anybody understand? There's 3 buttons when you're dealing with Transamerica. There's face, target, right, and accumulation. Does anybody know what target is? What it actually does? Does anybody understand that besides Tom Deutsch? Because I know Tom knows what that is. So after 60, right, quantum goes away. Okay. So I'm gonna show you like what it looks like after there. So now we have a 67-year-old gentleman. Okay. So 67, we got him $100,000. It's $363 a month at Americo. I want to show you what happens. Okay. I want you to see that again, if he lives 25 years, the reality is not only is he not going to have a lot of cash, he's probably going to run out of insurance because what's happening is the cost of insurance in America is really high. That's how they got their premium low to start. Okay. But again, we're at 363. Now I want to go over and show you theirs. Look at how much better Transamerica's price is now compared to Americo's. Also, Transamerica doesn't have a 6-month chargeback rule like Americo does. Okay. Remember, if the client doesn't pay, it pays for 5 months. And in month 6, they don't pay. You don't get that 5 months of commission credit in Americo. It all goes away. Okay. So understand that it's there. Now they're showing a real low value. Okay. They're showing 3.5%. Again, if we're at 3.5% over the next 20 years, again, we got real problems, like real world stuff. So we can look over here at this 7% like there. This is going to make you way more cash. Okay. Now I want to show you what target is. Okay. Target means we're adding money to go into the investment bucket. Okay. So we want a high face because we want coverage, but we also want to make cash. Target lets us do both. So you can see it's more money a month, but look how much more cash they're going to make. Okay. Because now you're taking that $130 a month extra and putting in. So if you're talking to a client that has the funds and also wants to build some cash, with the Transamerica one, you can build into Target. Okay. But understand the reality is, on this, Mutual of Omaha is pretty close to here. Here's the other side. Mutual is going to cap you at $150,000 face. You can take this up. Transamerica has made their pricing now. Like I just ran this, right? Again, 363. Transamerica is 327, and it's going to bill more cash for a 67-year-old. I get we've wrote a lot of America. I'm just going to challenge you to work with your agency owners and uplines, but go look at and ask yourself why I'm writing this when this is also a 6-digit PIN and it's going to make more cash and have like a way better solid foundation where you're not worrying about, hey, this is going to run out. Like I would ask, it's the exact opposite, Emily. They're the strictest on their health. When it comes to health, Americo is not the lenient. They are literally the most strict on their IUL. It's quite the opposite. Their weight scale's a couple pounds more, but again, when you're going there, do you want to have to worry about your clients running out of insurance? So stop being price focused and start being value focused, right? I personally haven't wrote an Americo IUL in a long time now. Like I haven't wrote one. I'm not writing them. I'm gonna up to 60. I'm going quantum. After that, I'm going Moo or Transamerica. Okay. That's where I'm going. It's a better product and I don't have the chargeback issues. Why do you want to, my challenge would be is why do you want to have to worry about that? It could happen sometimes. The client pays for 5 months and then they stop and then you're owed all that commission back. Also, again, if you're worried about face now, I want you to look at that. That's $363. It's on not that. It's they're only Transamerica is only 327. Right. So as you're looking at it, I really want you to understand. And as they get older, remember the cost of insurance is higher. So yeah, it doesn't matter if Steve, if you run out of, if they run out of, they're paying their premium. It's never stopped. It doesn't exist anymore. Their policy is dead. There is no death benefit. They do not pass go. They do not. Yeah, I'll show you that. I have that open on another page, Jeremy. I'll show that in a sec. It's also a better guaranteed product. So on how long the guarantee is. So let's show that. All right, hold on. I have that open. All right. Can everybody see my see my screen now? Yes. Does it show the face amount for solve? Do you guys see the Excel sheet or no?
Yeah, we do. Yep.
Okay, great. Thank you.
A little tiny, but that's
Yeah,
just
I mean
my
it's
eye.
huge on my screen. Yeah, but I'll show it here. Okay. So, right? Here's the big one. Okay. So this is for a 50-year-old male, right? At Americo, the alt lapse year is 35, Mu it's 39, Quantum it's 42. The guaranteed lapse year is 27. Okay. At Americo, it's 19 at Mu, 19 at Quantum. So on those, right, on those alt lapse years, just I've really gone down the rabbit hole on this and worked with Sigworth, and so I can help explain it a little easier. Sure, I can show that, Pam. I hate running it. I wish they would switch out of WinFlex, but I'll show it. Let's go there. So I can do that real quick. Hold on. Carriers, portals, where's Moon? I gotta reload. So they use, oh my gosh, everybody with the two-factor codes. All right, so we'll go WinFlex. So see this WinFlex button here? So you go to WinFlex, okay? Visit WinFlex. Log in. Right? Don't worry, Aaron. I'm going to show you something pretty cool today that if you're in Purdy, it's going to get to. Okay. So express illustrations. Okay. Universal life. Next. Right. I'll do test client. I'm going to make this 76 because it'll make them 50. Okay, next. We're going to solve for $100,000, right? So you can solve for face or premium, right? So we're going to solve for face, right? And I could say, oh, what's the annual premium? Okay. When you want to solve for premium, it lets you solve for how much it is. Okay. So I'm going to go next, right? Oh, hey, what is that? Company products, calculation output, right? Oh, you must select a product type, right? Universal life. So I showed all that to show you. Don't pick that one. So let me show you why now. You just go to regular illustrations. So don't do that because you're going to get there and it's going to go there. Okay. So I have myself, where is it? There's my test client. Test client, right? Male 50, standard non-tobacco. He doesn't have to get table rated. Okay. We're going to solve for $100,000. We're going to pay as long as we can because we're not doing this as a cash IUL. We're doing it for face. Okay. Do I want to show in disbursements? No, because I don't want it to go away. It's going to show what riders are there. Concept. right? It's really easy there. Okay. And then once you have those couple things in, pretty straightforward, current premium mode, right? I want it to be annual, semi-annual, quarterly, BSP, right? So I'll go calculate. See it running in the corner. Oh, I picked the wrong product. Yeah, good. I don't want to keep I know. State Alabama, that's fine. Oh, cute. So you got to go up here and make sure you're on indexed universal life express. Okay. So standard non-tobacco, standard tobacco, right? Solve for $100,000. I'm not worried about disbursements. Just leave this at the S&P 500. Don't mess with that. Okay. I want to show its level. I want to pay it. I want to know what it is monthly, the riders that are there. Okay. FYI, you need your info in there. If you try to run this and you don't put your agent info, it won't do it. Okay. So I already have that set up. Hit calculate, submitted. It takes 30 seconds to a minute to run it. Um, so if you're like, hey, what's there? Like, what will it do, like cash wise? If you're trying to tell a client, hey, in 20 years, you'll have $30,000, this is where you run it. Okay. Right. This report is for agent use only. You just click it. It's going to open it up and it lays out really nice. So if you learn to use it, it's there, right? So, hey, at a 50-year-old, it's going to be 134 a month. Okay. Um, and then normal stuff. It'll talk about how living benefits work, what the policy works like, and then you can go down to, you know, get to the cash. It's all the way at the bottom, right? So now you can see, hey, that outlay over time, what the guaranteed is, right? So alt scale, second scale, so it's 37597. And you can see in here, right? Hey, again, as they get older into their late 80s, if we only average 3%, it's there. So the reality is again, we better average 6, or again, we're all in trouble. But this will lay out like where it's going to go and what it's going to do. So just keep that in mind when you're selling it for a when you're selling it for face protection. You want to keep that in mind. That is, we've just done the math and the data on it now on the cost of insurance from the Americo side. Like again, their policy isn't priced as good. Um, Americo's is Moose is equivalent on the older people, and everybody's cost of insurance is way less. And the quantum product is going to make more cash over time. So, and when you're selling quantum, here is my suggestion to you. I don't sell quantum as an instant decision. Hey, we're going to have it today. What I say is this is um, a fully underwritten product that we get a decision in 2 to 3 business days on. I don't have to send the nurse out, the doctor anymore. It's the only one like it on the market. Okay. Because about half the time, underwriting still wants to look at quantum. But if they get it approved, I'm like, hey, I love it. Awesome. I got you approved. Right. Like, I love it. Like, they're just super excited. Man, Steven, you're in such good health. I love it. Right. Like, it's a they love you so much, we got you approved. Then you look really good, but just know 2 to 3 days it's going to turn around and go from there, um as it's going through. So does that help everybody? Yes, no, maybe so. Yes.
very helpful.
All right.
Hey,
So
Trevor, I'm just thinking for some folks, right? Because 2, 3 years ago, and obviously people are older now. But America, 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 right?
Yep.
Any strategies of potentially going back to your
A
client
hundred
base?
percent. Like any of that stuff I had sold on my policy reviews,
Yeah,
I'm gonna take advantage of and be like, hey, here's what I got this going forward. Let's go back and look at this. Okay. And there. Absolutely. I want to talk about what Pam just talked about because it is massively important. Okay.
yeah,
The other thing with quantum um is they will table rate, okay, up to table 4. They're the only carrier to do it. They're trying to get their age up to 65 too. Just I literally talked to Shannon yesterday. Okay. So hold on. Maybe let's go clients, test clients. So I was just messing with this client. Quote apply. IUL. Quit quote. Right. We're gonna start. Um, I mean, up until COVID, like they had just started like full. So Tom's done this 12 years, Tom. Tom, when was the last time for like what Sophie asked? Like, and still there's times like when you're doing advanced market stuff, they're still going out, they're swabbing you, you're peeing in the cup, they're taking your blood, right? Like they're still checking you. But when did you really feel this shift? Like, okay, hey, like we're gonna get all this instant decision coming. Like, when did you feel like that?
So it was subtle. So you're talking about when we moved from simplified issue, which is quick decision based
Yeah.
on the data that's available, but they went out to table 4,
Yep.
which caused the pricing to be up to going to an instant fully underwritten product.
Yeah, so like Sophie's asking because she's newer,
Okay.
like how long was that going on? Like it was still going like pretty much
What,
until COVID, as far as
what
I understand.
fully underwritten policies?
Well, like just even yeah, like them having to go out and like get instant decision stuff.
Them having, I'm not understanding the question, Trevor. I'm really sorry.
I heard on a line that you guys not super long ago, nothing crazy, were going to the clients' houses when you were doing the applications on paper, but then you were swabbing their cheeks. And this is like a technology development now that we have all this, or
Okay.
this is a COVID development.
In 12 years, I've never swabbed a cheek.
Yeah.
Okay.
You have it, but nurses have. Like they've sent
Yeah.
nurses out, right?
Okay.
They're sending the agent's not doing it. They're sending there's whole companies that's all they do.
I
well,
used
yeah,
to do that.
and you'll still get that like with like Path Setter for F&G as an example, right? Right.
Prior to getting into the advanced markets, which happened to be right before COVID, I had exactly one fully underwritten Transamerica term policy on an extremely healthy young man who insisted on having a medical exam done. That's one case in a thousand. I had everything else was simplified issue. And if you don't understand the value of simplified issue or non-medical instant decision, there's a great audio out on SoundCloud called The Value of Simplified Issue. Go listen to it. The value of simplified issue. Our whole business is built around it. It gets the client covered faster, it gets you paid faster. So whether it's I mean, to me, instant decision fully underwritten is only like one step away from simplified issue, which is better rates. They're using data in order to avoid doing a medical exam. If you're working in the advanced markets and sometimes you have to do a medical exam to get them what they need for debt-free life, infinite banking, or what Stephen was talking about, tax-free retirement, I mean, it's painful, guys. It can take weeks to get the client lined up with a medical exam and stuff like that. Am I answering your question, Sophie, or am I misunderstanding it?
No, you answered it. I just know that, funnel is fairly new and everything used to be on paper, printing out leads. I was just curious about, how
Yeah.
everything has developed in terms of the new products and how we do things and how it really wasn't like 15 years ago. It was only so long ago that
Yep.
we didn't have products that were underwriting you middle of the app. So I just
Right.
was interested. I just thought that was cool.
So no, the Casey and Brandon built the entire business around simplified issue, for the very reason that I mentioned earlier. It gets the client protected much, much faster. And you know what we could do, Trevor, is maybe on another one of your things, I could explain kind of how table ratings work, how it was explained
Yep.
to me, and where simplified issue works versus where fully underwritten works, and what the insurance companies are allowing as far as risk to enter into their universe versus what the client's medical conditions on paper and digitally look like without doing the medical exam.
Yeah.
I'd
Yeah,
be happy.
yeah, let's do that. That'll be a good one.
I'd be
So,
happy to.
yeah, so what's also awesome about Quantum is right here, okay? You can look at what the cost is on a substandard rate, okay? So if they have a really bad BMI index, okay, you have to, right? This is why we stress this is the most important thing. And we're going to talk about that after this, okay? Because we're not selling products, okay? The clients don't know what products are out there, what's available, so on and so forth. So let me give you, and I'm going to share a story why it's important. So I have a woman last night that I'm helping. I got her on the phone and we started, and she's 71, but in really good shape. Her grandma lived to 100. Her mom lived to 96. We were looking at different products. Okay. Um, I write very little of the AM product because it's on the fence right now. It's literally the conversation I've had with Pete, and they're working on it. I don't write a lot of it unless I know it, and I feel they're like really healthy because it has a preferred plus and a preferred rate. Okay. So the 2% of people that are there, you can get them a good rate on a whole life policy. Okay. But I was solving her problem. Her problem is she owns her house. She owns the house that her granddaughters live in, that she's also helping pay for. And if something happens to her, it's going away. Well, what I did was is I showed her 12, 18, and 24 months. But I could really only get her like 22 to cover everything. So she was like, hey, and I'd asked her budget, all this. She's like, I'd like to be around 200. So 12 months literally was $199. It was great. It was perfect. But then when I showed her how much extra cash, because I showed her all three, I was on crank wheel, showed her all three. She was like, wait. She's like, so for $120 more a month, I'm going to double my cash value. So the policy would be worth 75 when I go instead of 50. I was like, yeah. So because I solved her problem, and I never acted like $300 was a month was a lot of money. Okay. I set it for there. And then again, I've explained this before. What my lockdown is afterwards is I explain to them what the 2-year contestable period is. I want to be very clear about that. Okay. This was a Razor Ridge lead. I said, hey, you just answered my ad. I want to explain to you what's going to happen now. And I want to make sure you don't ever lose the rate we got you. Okay. Not that you'd ever, I said, and I'm making a joke, not that you'd ever cheat on me, but I've had it happen before. Okay. Now you're going to get targeted with other ads. And the reason I share my screen is I go, I've shown you what we went to get approved for and what they approved you for. I go, you're going to see an ad that says, oh, we can get you a better rate. But here's the thing. If you go apply for a bunch more insurance and you're either declined or your health changes, in the first 2 years, every carrier has the right to drop you. Now, if you don't do that, they can't drop you. It doesn't matter if your health changes the next day. So understanding that value proposition and how to explain to a client, my clients then don't go shop afterwards, or if they do, they call me first. They're like, hey, I got this guy saying this. And I'll be like, no, remember, I showed you this rate. Okay. So as you're sitting down, show that. But the other advantage there of the substandard rate, now keep in mind on a face value product, okay, the face value product, a substandard rate is going to be a lot more money, but it's going to be still way better than we can get them on a whole life policy. Okay. But it's going to increase it by 100 or $200 a month if you have to go substandard, but it's going to create way more cash too. So just understand it's not going to get them approved. Okay. So that's there. All right. Now, who's ready for something that a few people know about. We have beta tested, and I'm going to roll out today to Purdy. And there's going to be a few conditions behind this. Okay. So the conditions are you have to be, for now, in the Purdy organization. Okay. You have to be active in the Mac room when you're working. All right. But one of the questions I saw earlier, who handles the SFG cheat sheet and so on and so forth? It's a helpful tool. But we all know underwriting takes a lot of work, correct? So we have built an AI tool, okay, that has all our products built into it now. That instead of having to go for, just like the Guide Father isn't perfect, this isn't perfect. It's 98% good because we're still working on it. But you can now type in, I have a 72-year-old female smoker at 55, 5'5", 190 pounds with one hypertension pill, type 2 diabetes on metformin. What can she qualify for? Hey, based on this, she's probably going to get Eagle Select 2, Transamerica FE, Living Promise, UHL, right? It's going to explain why. Okay. And then you're like, hey, I'm at 90% commission. What's my commission level on UHL Express? My commission level is this. Okay. So now I'm like, hey, I got a 50-year-old male non-smoker. He's 6 foot, 195. He's in great shape. Like, what quality term can he get? Based upon his height weight ratio, he can probably get preferred plus. It caps right at 95. Okay. So this has every core product built into this. Okay. This has the 10 carriers you get out of the gate, right? All of Foresters, all of Trans Am, all of Moo, AIG, everybody. We'll talk, relax. So everybody slow down. Okay. So there's a couple things with it. You have to have a regular Google account. Okay. It has to be an @gmail.com email address, right? So if you have Sophie at the vancortonagency.com, don't do it. It needs to be Sophie at gmail.com, Tom at gmail. I don't care what it is. It needs to be a Gmail address because of how we built this. Okay. It's built on the back of a Google AI product. Okay. So as it goes through, it'll explain. Okay. So you have to apply, and I'm going to put the link, request access, and then we'll get you approved. Now, I'm serious up front on, so I actually spent time aligned with Brandon talking about this because I he connect I, long story short, Brad Smith's really heading the charge on a bunch of this stuff with Fletch and Brandon, and then they're connecting me with some other people, and just know Symmetry is going to have a super tool. No, it's not. It's not. No, different, Charlie. He can't answer this product is for underwriting. This product, you can't say like, hey, I love Jim's GPT, okay? But it's not solving underwriting questions, okay? Jim's is, hey, I need help and I'm like stuck here. This is, hey, I'm working with this client. It's there. So example, your client lives in Arizona. It says, hey, it's valley fever. If I go, what's valley fever? I don't have anything. Like, you need to ask it, hey, can my client get qualified for valley fever there? No, it's not built on Gemini, Tony. So, right, like, hey, and I've just put random questions. How do we get commission on the Chrono product when the target is over the 12 month? Well, what do you mean? I don't understand, right? What are the age limits? It's going to ask you different things. How I earn commissions on F&G Quantum excess premiums, right? The commission schedules. Look at the target premium. It explains what it is. When you load over the two, it's there. This is also very mobile friendly. Okay. So, right, like it will walk you through anything. So, example, somebody unmute and give me a case they're working on right now.
I got a guy, good
Okay.
health,
What
but he
good health
has,
does that? Like, I need details, right? I need
he's
age.
44 years old, lives in
Okay.
Nevada,
Okay. I have
no
a
current medications, but two previous DUIs within the last 5 years.
right. So, I mean, I already know he's good, but let's do this. This is great. Do you smoker or non-smoker?
Non-smoker.
Do you know his height and weight?
Yeah, he's five. No, I'm sorry. He's 5'11" and 160 pounds.
In the last 5 years?
One was like 3 years ago. Another one was about 5.5 years ago,
Okay.
approximately.
So we're gonna say, what can we get him qualified for? So, right, understand this isn't going to answer you in 2.2 seconds. It has to access all the carriers, all the underwriting, all the data. You got to give it a minute or two. Okay. So don't like freak out when this isn't Google instant search. Understand it's parsing hundreds and hundreds of documents and hundreds of underwriting guidelines and go from there. Now, this isn't going to give you the price either. This is right. You got to go get it quoted, but this is going to let you ask questions like, hey, I have a client that is A1C is below 7, but they're this weight, like looking at those things and start underwriting it. So hold on here. So see, you can see it's finalizing. So, hey, your client, based on multiple DUIs, mean his most DUI conviction and license suspension. Here's a breakdown. Okay. So he could maybe qualify, right, for the UHL, and it explains why, right? If the most recent DUI was more than 4 years, you might be able to look at Transamerica fully underwritten. Basically, everybody else is going to decline him. So then what you can now do is go to the carrier and do a risk assessment. Hey, I need help on this risk assessment. Okay. Here's what I got, right? Here is it possible. But again, this is still software we're creating and generating. You can't make it gospel. I want to be really clear. This is going to make your life a lot easier, but it's not perfect. Okay. I really want to stress that. Okay. Because I don't want the thing giving me, I don't want the text giving me, well, Trevor, the underwriting tool said I can do this. And then, but it didn't because maybe you didn't ask it right. Okay. The more information you feed into it, the better information it's going to put out. Okay. So, right. But that's it. So think about, right. So how long have you been here now?
Me?
Yeah, you.
Oh, me. I think I'm in my eighth or ninth month. Eighth month.
Right. Right. So and I remember this, right? So think about back to month one and how overwhelming, right? Um, how overwhelming the underwriting process felt to you. Okay. What the goal of this is to say, hey, you stop. I wanted to essentially, I'm taking away everybody's excuse that they have to know everything now. Okay. You don't have to know everything, right? We have all the data, we have it built in. Okay. And you get to look at it. And this will stay updated as carriers update underwriting guides and changes and so on and so forth. But for those that say, I have to know it, it's there. But this is going to give you the why. Hey, this. So then when you're talking to them, hey, like Tony was just asking, hey, I got a chance. I got to call two carriers. There's a shot, but he's like, oh, nope, 4 years. Okay. If the most recent was more than 2 years ago. Okay. So what I'm going to do is, right, I'm going to go and say, hey, UHL, I'm going to get the exact info. I'm going to say, hey, there's a chance I can get you approved here. Let me go look at this and feel how it is. And then you can go to the underwriting tool and say what's available. All right. So, right. So example, then it tells you because we've been training it so much. Like, what's the 10-year look back for Quility Term Plus? Right? Like, what's that mean? So, right. So again, it's gonna dig through a lot of product, okay, as it goes through, um, and go from there. There we go. Perfect, Jan. So, I'm gonna get Jan to unmute here, and we're gonna put that in, right? So, based on our thing, legal and general banditor, right? They have a 10-year look back on that. Okay. They're really picky about DUI. If you got one, they're not giving you, let alone two. Okay. So now, Jan, can you unmute for me? Where's my little pocket-sized Jan at?
I didn't ask that question though.
You didn't ask, what if the client has stage 2 diabetes with less than
Oh, yes,
a
I did.
7-1?
I'm sorry.
Yeah,
Yes,
yep. So we're going to put yours in now. So it's a 53-year-old male or female?
male.
Male. Do you know his height and weight?
I do not. We just had a brief conversation.
Okay, right. So again, we always want to get as much info as we can. All right, male. And do you know if he's a smoker or non-smoker?
I think he chews.
Okay. Tobacco user with chewing tobacco. Okay. Type
And
2 diabetes. Insulin or no insulin?
nothing. Everything's under control. AIC is less than 7.
Yeah, A1C. And it's just so you know, it's A1C. Just so
A1C.
yeah, just so Dana is less than 7.
And
What
he wants. Okay, go ahead.
what does he want?
He wants a policy. He was told he could get a whole life policy, but what he wants is because his parents have dementia, and he wants something that will take care of him if he ever has to go into assisted living for memory care.
Yeah, that's off the table with type 2 diabetes.
Okay.
So, but that's something you can ask though, right? So that's the type of thing you can say, hey, right after what does he get qualified for? Is there, and I'll show you what we can do on how we can ask here. So, all right. So again, this is going to come back and it's going to be like, hey, height and weight are going to matter. Do we have answers against this? Okay.
Well, he's at least 6 feet, and I don't know how.
Yeah, it's okay. Like, well, and again, it's going to say if he's 5'10", 425 pounds, none of this matters, right?
Oh no, he's a couple 100 pounds.
Right.
Yeah.
So one of the things this is going to warn you about, okay, is because many simplified issue carriers automatically decline applicants with the diabetes and tobacco, you got to be strategic about where you place him. Okay. So why did it go to Strong Foundation with Foresters? Because Foresters treats tobacco like a standard non-smoker. It only treats smokers as there. So it's saying, hey, they're diabetes friendly and they have a very unique non-tobacco definition. So it's letting you know, hey, this is where I'd go first, right? And then it's saying, hey, United Home Life, okay, you can look at this, but again, I also know Banner's thing is like really, really high, okay? So here's the other options, right? Carriers that are most likely to decline him, right? It said Mutual and AmAm on their terms, they don't like type 2 diabetes with tobacco use. They don't like it because they like that. Every carrier has a different lever. There's different tools in the toolbox. Okay. So he wants to know if any of the policies can work with long-term care if dementia happens later in life, right? And then we're going to ask it that, like, hey, is this even possible? What can I look at? What are my options there? Okay. Yeah. So yeah, you got to just structure it. Yeah, I love what Tom and Miller said there. They answered it for me. So again, it's going to look at it. Again, it's got a lot of stuff to parse. So again, when you type it in, you're not getting an answer in 3.5 seconds.
And
When you ask a more complication, it's going to be there, right? So right, hey, LTC have extremely strict stuff, right? Your client can access some stuff through an accelerated death benefit or chronicle or confirmed care, right? So here are things that you can look at, and then how you get good at underwriting is you then call the carrier and you say, hey, Mr. Carrier, I looked this up. This is what it says. Can I get a risk assessment? Okay. Um, right? Like you need to look at like, hey, they're not long-term care insurance. There are different things. Okay. Like then you could say, hey, what are the specific payout limits for chronic illness riders? Right? There's anything you want to know, right? Like, hey, tell me more about the Banner Life digital application process. So, all right, what do you got, Mr. Deutsch?
So I just had a question for Jen real quick.
Yep.
Jen, you said that ultimately what this person wants is to make sure that if they end up in a long-term care situation because of dementia or a Alzheimer's or something like that, that they've got some protection in place. Am I understanding that correctly?
Yes.
Okay, so there's a couple of avenues we can go down. Some of the advanced market products we have do have a chronic illness rider attached to it. We can do some research on that. What I just defined for you is chronic illness. Chronic illness is when you can't take 100% care of yourself. You need either in-home health care, assisted living facility, or nursing home. Are you with me on that?
Yes, sir.
Most commonly in our society, people think of long-term care insurance. My dad had long-term care insurance. Thank God he had long-term care insurance. When he got his brain tumor, it helped tremendously. But the process of filing every month all the bills, having it immediately declined by the carrier, one of our carriers, by the way, I didn't sell it to him, but one of our carriers immediately declined, and then me having to go through the appeal process every month to get paid for it was a nightmare. Okay. Now, if you contrast that with a life insurance policy with living benefits, and every carrier is going to be a bit different, most of our term policies do have a chronic illness rider attached to it. The problem with the term policies is they are going to run out maybe before he develops the dementia. Am I making sense?
Yes.
Okay, so you need something that's more permanent. Most of our whole life policies don't have a chronic illness rider. There's two exceptions. Final Expense for American Amicable Dignity Solutions and Moo's Living Promise, but they've got a low cap. So
He wants 250,000.
okay. So what I would look at is one of two paths. Okay. One is a self-funded long-term care policy using an annuity that we have access to that's very rare in the world out there because of Symmetry's relationship with another company. So get with a annuity SME. If they've got money to self-fund it, they can use their retirement money to maybe self-fund it. Another would be to use something like Mutual Trust Life's high cash value participating whole life or Live Well Plus. They both should have a chronic illness built into them, and they both are it's a hybrid product of whole life and term. So you start them with a hybrid product that has the term on it, and they overfund the policy to the point that when they need it, it's worth it. I probably just went way too quickly over all that.
You did that. You're getting so.
I'm way in the weeds. I'm just
You're
giving
way
you,
in the weeds, Tommy. You're in the weeds.
Jan, you're
So
going to need to talk to somebody in your upline about who would be a great SME to talk to about these things. That's my suggestion for you for that client.
right. So now I'm going to show you. Hey, will F&G Quantum look at this? Okay. Yes, they will. Quantum will look, but here's the other thing that you can also pivot to possibly pass setter and go fully underwritten if Quantum won't. And they'll tell you that. Okay. So they're going to tell you why. Hey, type 2 diabetes is less than 7, but he's going to get a tobacco use at 53, fits within the coverage limits, right? And living benefits for chronic illness rider that he just talked about, right? So the rider allows for the policyholder to accelerate up to 25% of the death benefit annually, up to a lifetime maximum of $1 million, if certified by a physician, right? So it's explaining what it is. It's also explaining what the hurdle is. Okay, so they're not going to instant approve them, but they'll probably look at it, right? And they'd be willing to maybe substandard him. Okay, so on an instant decision product, you can go down that route and look at it. Okay. So, right, right? Can you get preferred tobacco with FNG? How does the FNG quantum define the chronic illness trigger, right? Like it's also going to tell you, hey, you should probably be asking this to understand where it's going. Okay. Yeah, no, this is correct. This is a very different product than what Jim's doing. Okay. I love Jim's product. I use Jim's product. I like what Jim built. I think it's a great product. That is a very different situation than what we're trying to do here. This is, right? I'm trying to cut down how much time we're spending underwriting. And so we understand it. I will tell you, my team that have been using this, they ask me a lot less questions on underwriting now. A lot.
Trevor, this is brilliant. How do I get access to it?
Yep. So here's the deal. Okay. So I'm going to put the link in here. Okay. Right. Hold on. So again, I want to be really clear about this. Okay. And I'm serious because we're going to monitor it. This is open to anyone in Purdy, even a brand new agent. But I have a couple criterias for you to have access to it. When you're working, you better have your camera on and be in the Mac room. Right? We're going to lead from the front and we're going to show people how to lead. Okay? We're going to show up, right? The calendar's coming out. Like you guys saw it online, right? Even if you're brand new, right? We're going to step up and we're going to go there. I'm not charging $1 for this, okay? So you guys are clear this is not free. I have to pay for all the tokens that are used. All right? But I want to grow the agency and I want to help everybody grow. Okay? So there is a cost to this. Okay? I'm not charging anybody for it, but you got to show up, and when you're working, you got to work in the Mac room and you got to give feedback. Okay? Like, hey, I'm seeing this said this, because it's not perfect. It is AI. It is going to error, and we've had it. We've been beta testing it since the end of the year, and like I've fixed a bunch of stuff. Like, oh hey, like at one point it was confusing Americo and AmAm. It was like mixing. So I can go teach it there and then understand this. The more we use it, the better it's going to get. And then the cool part that's coming is next, we're about to add all of mutual trust into here. So all the mutual trust products are going to be under here, right? On top of it. And then a few of our other carriers you get once you're not brand new, I'm adding those in. It's a lot to build into the database, but mutual trust is literally my next one. It's there, but that's my request. And here's the deal. The way, like, if you're not there, when you request it, we're just going to monitor it. So, I'm not going to be able to get to everyone instantly. Okay. So when you go in, go Crest. Remember, if you're not using a Gmail, it won't let you do it. Okay. So, like, again, take advantage. You guys, and again, I want to hear feedback in here. Like, hey, Trev, I asked this, or hey, this was working really good. Like, oh, this helped me like get that there. We want both sides. I need to hear everything because we want to make this better for everybody. Okay. We want to work down. Yeah, it's viewer only. So you can go in on the viewer though, and you can type in questions, right? So you can go, right. So let's go beta test somebody right now. Let me go log into it. I got to go into that Gmail because I'm about to get 500 emails. I got to log into that one. So, oh, yeah.
I really believe they're on it, but like
Sophie, is that you? Soap Hawaii 11 at Gmail?
my friend.
No.
No, that's me, Steve
No.
O'Brien.
All right, Steve. Okay. We're gonna. All right, here. It's Bender's birthday. We're doing Bender first. Okay.
Cool. I'm actually jumping to a client meeting,
Oh well, darn it. I
Damn
was
it.
not going to do that.
but thank you,
Okay,
buddy.
but you're approved. But
You're a
hold
good
on.
man.
I'm gonna have somebody show how it works real quick. Hold on.
Thank you again.
I'll
Thank you.
guinea pig for you, Trevor, if you need.
So I don't know who said that. I couldn't.
Eric Hansen.
Yeah, let me find Eric's.
By the way,
There
you
it is.
can get a better guinea pig than Eric for things like
Yeah.
this.
And then right after that, I have
Trevor, this blows me away. I can't believe I've been doing this behind the scenes and and just telling us now. This is awesome.
Yeah, we've been working on it. So give shout out to Sam and Sean as well. We've had a few of their agents helping us beta test it. So no, Jan, you got to request that link. Okay. So I'll make sure everybody has that link. So Eric, let's jump in and have you share your screen. And I want to show as you log in, I want you to like just kind of show like so I can walk you through it. Everybody has a demo here. And then I'll get everybody approved. If you are applying for it and you need help, message Tess, okay? And it's like, hey, I applied, I haven't come through. Tess is going to help me manage a lot of this, okay? So we'll get that in there. Did you get it? All right. Right? So notice this is what you see when you come in. Hey, ask about products, compare carriers, review, right? Like this is kind of what it's for. So do you have any cases you're starting to work on yet?
Whoops, sorry. Yeah, I do. Let me,
Okay. So let's put it in and see what you get.
okay. Wait, let me find my, oh, hold on, I gotta pull up my funnel here real quick. Uh, so
Yeah, viewer only. I won't get if nobody gets editor access because then you could screw it all the data
yeah,
up.
yeah.
Yeah, if it's not, if I see it, I will let someone know.
Um,
That's a little dude.
yeah,
Okay.
he's Chinese,
Okay.
guy,
Yep.
um, in LA.
How's his health?
Really good.
Okay.
That's it. He doesn't have any other health
Yeah.
issues.
So put no health issues.
And he needs, he's looking for 100K with living benefits.
Okay. And then say, what products should we look at for 100K with living benefits?
Oh.
No. Don't say 100K with living benefits. Like ask, you want to ask it. I would like to find $100,000
Oh,
with living
gotcha.
benefits, right? Like which products can he qualify for? Yep, in California. See, that's a big deal.
Yeah. Yeah, I learned about the whole living benefits thing when
Yeah.
I first bought my California leads from IO,
Yeah.
the hard way. I didn't know that before.
Well, it's cool. We have quantum, so we're good there.
Yeah,
So,
I've actually, yeah. Boom.
right. So, but that's why this is important, right? Like, hey, when it goes in, so you see, right? Hey, calculating it, analyzing BMI, it's going to review the weights, it's going to look at, the products. All right, hey, right? He can still get, right, a term life, right? Right. So it's going to give you different options. These aren't in perfect order. Okay. So, but you can see like, hey, what it does. So remember, right? What does, scroll up a little bit, right? So, hey, is an exam required? What's the underwriting? What he can get, right? But we know quantum has that instant decision now, and it's going to be a per minute product for him, right? So in California, that's the route I'm going. So now it says, hey, Americo does, right? And then now type in, does Americo have living benefits in California? Right? Or you can even click, see, it says, what are specific, even do better, click that one. Let's see what it
Yeah.
puts up, right? I haven't clicked that before, so let's see what it says.
This is so cool. Me and somebody else attempted to try to do something like this. It was so broken, it did not work.
Yep. So, right, it's defining what it is, right? Like, hey, what's available? So scroll down, right? So it's saying, hey, you got to look at there. So, and then say then I would say what products, right? Keep scrolling, right? What products, right? No, not health insurance. What products have living benefits in the state of California? Right? So you can ask it that way too. If you're like, hey, what has that there? And where can they do it at? Just like example, like why we have Occidental for New Jersey for Aman. Yeah, it'll be okay with the typos. It's fine. So, like, again, it's not, it's there, right? So, some of the term stuff, right, you can look at, but permanent products, right? Now, here's the deal. So, now click on that 16 under Americo, because Americo doesn't have full living benefits, right?
This?
Yeah.
Oh, cool.
Right. So, understand it has potential, but with Americo, all it has is the advanced rider. So you got to look at what does it have, because it's saying, hey, it has some of it, but it doesn't have all of it. Okay. Because Americo's IUL doesn't have the chronic and the critical. Yep.
Yeah.
Right. So, right. Like, hey, what does it do? How does it work? Right. And where to go. And then you can ask, like, hey, I'm seeing this. What do you think there? Right. But it'll break down what it is and how it works.
Man, is this slick, Trevor.
Yeah.
Wow.
This is
This is a
taken
game
sick.
changer for me because I've only
Yeah.
got about 6, 7, 8 applications in so far, so I'm slow on this stuff big time.
Yeah. Well, of course, everybody is. I use this all the time, but we've been working on this for over 6 months. Like, this is not this was not an easy build. But it's I think it's going to help everybody a ton. Cool.
Yeah.
Oh,
Bookmark that one.
hey, who hit record today?
That one.
Because I went to go do it and it was already recording,
Yeah.
which means it's not in my cloud. Hopefully it was Mel. She's on a call. Okay. So yeah, so we'll get everybody.
I did hit record when you started, Trevor. To make
Yeah,
sure
so if you could, like, because then I got to have Tess hunt it down from you. If you could let me record mine so I can get them uploaded to YouTube faster for everybody, buddy, I would appreciate that.
Okay.
Because I went to go hit record and it was already recording.
You should be able to record though, even though I'm recording. That should never prevent you.
Yeah.
It wasn't letting me earlier.
Okay.
Okay. Cool.
We'll work
Whatever.
through that.
It's there. All right,
Okay.
we're all set. No, I don't care if you record it for your own thing.
I've got a system now where we don't have to wait till the end of the day for me to log off and render it. I've got a system now. I can get it to her much faster.
Okay. So
Okay.
yeah, so Tess will get through, get people's stuff approved. If you get a decline because you requested editor,
Sorry
just
about
understand, right? Like if somebody requested editor, you won't get editor access. And just again, my only request is when you're working, come work in here, right? Let's all do this together. We don't need to do it alone. And it's eligible for anybody that's in Purdy right now. We're not rolling it out to Symmetry, and we'll keep it covered.
Trevor, I had to take a call. I just want to say the work that must have gone into making this happen, I can't imagine. One of my agents asked me, would I ever consider this possible when I was in the IT world? Yeah, in science fiction. This is amazing. You did a great job. I do want to emphasize what you said to everybody already. It's operate under trust, but verify. You've got to use this to help narrow the field down of who you want to go with, and then call the carrier or get in the carrier chat and verify that this is the right fix. If you get someone declined, you do not have permission to pick the phone up and call Trevor and say, your AI told me that they would be approved and I didn't get them approved. He doesn't have any control over that. Okay. He's just guiding us and saving us a ton of time. Yeah. Really, really brilliant, Rigo. Really brilliant. So thank you, Trevor. Appreciate it.
Yeah. Yeah. So you got to give me a few, everybody, to get you all approved. Like it's going to take a little bit. I got 1 or 2 requests there that came in from this call. So yeah, that's there. Okay, cool.
Thank you, Trevor.
You're welcome.
Love it, love it, love it.
Let's give him some love.
Yeah.
That's awesome. It's mind blowing, Trevor. Thank you.
You're welcome.
But his policy center needs to build it first. Like, what are we pointing to? Like, but they.
One last thing. Now, we're ending the Trevor call, right? The Trevor Tipton Learning Hour. Okay. Don't leave. Stay here. Hang out. This is where everything's happening. Turn your cams on. Be part of the Be part of the party.
Because for instance, because we'll be merging one
Tom.
For billing center code after the
Yes, Candace.
Yes, let's dial.
so it'll be available in the